Hello, everybody. Welcome to the IC Topic Chats. Today is, it's January 20th. I think this is the 75th or 76th IC Topic Chats session we've done. We started in May of 2020. It was kind of a reflection or kind of an outgrowth of an e-study that I did for AEA back then. I did 4 two-hour sessions with folks. And I think some of those folks may even be here. Anyhow, we couldn't talk because it was just like this old antiquated thing. And we were all in the pandemic or deep in the pandemic at that point. And we had all figured out how to use Zoom, but we were still using this old learning management system that was really uncomfortable. So these IC Topic Chats are an outgrowth of that. They are a weekly session. I kind of am the main facilitator, but I'm certainly joined by several friends every week and co-hosts in Ann Price and Susan Wolf. And we might as well just throw it out and make Kurt Stuke one of those too, because he's here almost every single weekend. And it's just like a roundtable session. We have several different co-hosts. I probably do a third to half of them. And then the others are, different kinds of gatherings of panels, and we're going to have a book review, invited guests, those sorts of things. But it's always about independent consulting topics. And we are primarily all program evaluators, or very similar to program evaluators, independent operations. And so that's what we're about. The big idea here is it's roundtable. We get a chance to talk and discuss and disagree with one another. And I got a feeling there are going to be some disagreements today, because I have some perspectives on partnerships that not everybody shares. And I'm hoping we get a chance to talk about that. I haven't seen Cheryl show up, but Cheryl has a lot to say about partnerships, formal partnerships, that I'd love to ask her about. Hopefully she makes it. All right. Anyway, so the topic today is incorporation, and let's jump into it. Share my notes up. Before we get started, I just want to say I'm just a guy who started a corporation, an SCorp. And I'm going to share my perspectives of doing this for about 12 years. I am not a lawyer. I'm not an accountant. I have no professional capacity to say any of the things I'm about to say, other than the fact that I've been around and this is what's worked for me. And I've been taxed. And I've thought about taxation. I've thought about liability. And my wife's going through this process right now on her own. She's creating her own consulting practice. So we're having these same conversations. So these are very pertinent to me, but I will say at the end of the day, go talk to your lawyer. And I mean it. Don't try and do this on your own. If you decide you want to start a business or you want to change the way that you are incorporated or recognized by the federal government, you should seek out legal counsel. It's going to save you money. It really will. If you try and do this on your own, you're very likely to do it wrong, because not only is it got a lot of things you got to remember, but they're different in every state. So you might look up advice on the internet and you could very well do it wrong. So make sure you're looking at it. I will say one great internet site, which is listed right here, is Investopedia. I did a lot of reference work with Investopedia in preparing the session. So feel free to go out there. Again, I think they're going to say the same thing as I have here. And also, if you're from Canada, all bets are off for Canada, because I really don't have any understanding for how things are set up there. I think they might be similar, but I don't know for sure. We're going to talk about these types of structures today. I'm going to primarily focus on the ones where a lot of us end up. Most of us start as sole proprietors, or sole props, or sole proprietorship, which is the top one. There's a lot of conversation about partnerships. I'm going to share my controversial ideas about partnerships. But you'll find that ultimately most of us end up as limited liability corporations, or S corporations. I want to talk a little bit about B corporations, which are actually not a recognized federal government structure. It's just something you choose to do, you opt to do. And nonprofits and research institutes are organizations typically affiliated with a university or some sort of a large nonprofit organization. But the sole proprietorship is the simplest form of business. Usually when we start a business, we're kind of doing it as a side hustle, a side job, something we do while we're working, the real, quote unquote, the real job. And this is something we do in the evenings or on the weekends. We have some capacity to help somebody out. And we have a friend who says, hey, can you help me do this thing? And I started this way. I was a director of institutional research, and I had previously worked in a research institute at a university doing program evaluation, and I was asked to help out. And I started making a little extra money, and I got interested in that approach. So the advantage here is it's easy to form. There are low costs. It does, when I say there, you do need to form, you need to file, often depends on your state, look it up with your state, check with your lawyer, but typically you are filing a business license, and you may be filing some paperwork, but it's pretty simple. Effectively, you make money and it comes straight to you as, Matt Feldman, and then it's taxed as if you were getting any kind of income. Typically, people are asking for a 1099. They'll give you a 1099 or a W-9. You need to fill out a W-9 document so that they know how to report the income they provided to you, because they're not taking out taxes, because you are a contracted entity aside from being an employee. There are risks, and typically what happens is people are perfectly fine being sole proprietors, sole props, until they get to a couple changing points. One, they start to realize this is a quote unquote real business, and that there is liability. Usually at the time that people start asking for your insurance certificate and you realize you actually need insurance, you start to think about what kind of liability you have. And if you get sued, what can happen? And that's the key reason people start to form corporations. So let's talk about why we incorporate in general before we get into the different kinds of structures. Top two are the main reasons I'm going to say. I think all of these are good ideas, perhaps, but the main reason most of us are doing it are to limit our liability and to reduce our tax burden. You're limiting your liability because when you create a corporate structure, you're in effect creating a separate organization that has its own liability, its own independent entity. The key thing that scares most of us into getting a corporation is that consideration that I could make a mistake, somebody could sue me, and they'll take everything I have from my company, but also they could tap into my retirement. They could sue me for my house. They could get my kids college funds, because if you're operating as a sole proprietorship, it's just everything is combined together, personal and business. If you remove that business to its own entity, you limit your liability that way. That's that term, limited liability. The other reason is you can reduce your tax burden, and I don't think I can explain this in any great detail, aside from you should talk to your accountant about this, but I will say this. When you pay yourself a salary, you're taxed at a certain rate by your state, by your local entity, by the federal government for Social Security and such, but it's different tax rates for when you're taxing your company and profits. And if you're taking a direct distribution, it's taxed differently. So again, everybody's going to be different. It's all going to be handled differently in different places, but that's one of those main reasons you do that. And other stuff why you incorporate it. There's other things listed here, but I'm just thinking about this. One of the great things about having a company is that it's a separate entity and it has its own expenses. And every time I do something that benefits my company, but may also benefit me, those are expenses that I can put into the company that I'm not having to pay out of my own salary, meaning it's pre-tax, right? So everybody says, is that a tax write-off? You hear that a lot. Well, I don't worry about whether it's a tax write-off, because I'm not paying tax on what I'm using for that expense. If I go buy a chair for my office, the chair cost me $100. That's pre-tax, meaning I got income for my business. I didn't pay taxes on that income, and I used some of that income towards an expense to buy my chair. If you are an individual, you received income, but you've paid a tax to get that income. So they pay you $1,000, you pay whatever, 20, 30% of that. You only have $700 and you go buy a chair, and that chair is a tax write-off at the end of the year because you didn't need to pay taxes. So this just simplifies things. The other reasons that people incorporate is they clarify their business, meaning your business is, you can just think about it. You can separate your brain. It's not like, well, here's my business, here's what I do. It's you create this entity, right? You can create bylaws, you understand your organizational structure, all these things. If you have a business that's set up independently, that's incorporated, you can transfer it, meaning you can sell it, right? You can give it to somebody else. It's got, it's got its own being that can be handed off. I don't worry too much about raising capital or building credit, but I do, and I have. Though, frankly, every time I go to ask for credit against my company, they always end up looking at my personal stuff anyway, but that's okay. Credibility, that's more like the interpretation of whether you're a real deal, right? I do say by having a corporation, frankly, I will tell people, this is what we do for a living. This is our job. This isn't a side hustle for us. So I think that's helpful. And perpetuity, meaning this organization is developed in a way that if you get hit by the bus, it exists, it continues to exist, and it doesn't literally die with you when you pass away. It has its own organization that way. It is, certainly in all of that, you need to think about your ownership structure and things like that. So let's talk about partnerships. And before I get too far into partnerships, I want to say that Susan, Ann, and Cheryl are doing a presentation on partnerships on February 10th. I think to some extent they might be going into deeper, I don't know exactly what they're going to present on, but they might go into deeper details on this corporate setup of partnerships. But I think generally it's about people collaborating together in an informal way to create relationships that can develop more business. So just know that we're going to continue this conversation about partnerships on February 10th. There are, as far as I know, 3 types of partnerships, formal partnerships that you register with your state. There's a LP, which is a limited partnership. Basically, that's saying we're going to work together. We're going to separate this business 50-50. Everything we bring in, the profits will be split between you and me. We're great that way, or between 3 friends. The LLP is a limited liability partnership. That means you're not liable for another partner's misconduct or negligence, which I think is a good idea. I question how true you're not liable, because I was an employee with Arthur Anderson LLP once upon a time, and when that ship went down, it took everybody down with them. Now, I don't think you could get, each individual partner couldn't get sued for somebody else's negligence when they were working with Enron. So this is 20 years ago. Most people won't remember this anymore, but everybody went down with that ship. They all had to go find something, and then when the company folded, whatever you had invested in it, it went away, and they had to go create new firms. And I think most of them are all millionaires still, but that's okay. And there's a new partnership structure that I just have learned about. It's called an LLLP, so it's 3 L's, and that's a limited liability limited partnership. And I've thought about this. I'm not sure if it makes sense. I can't even apply for one in Illinois, so it's not really relevant to me. It's not in all states, but it's for non-working investment partners. If somebody wants to invest in your company, they're only limited to the amount that they place in as an investment into your company. So the more I think about this, I'm not sure how this makes any more sense than providing and selling stock through an SCorp, which we're going to get to in a second. But there is some concern about partnerships. I would caution you to definitely spend some time thinking about whether you want to start a partnership. Just because you and your best friend want to start a consulting firm and you're just so gung-ho and you're going to be better because you're working together, take a pause on that. operate as two sole proprietorships for a while and make sure that this makes sense, and definitely seek out a lawyer ahead of time. Todd Sivia, my lawyer, was on the program on this IC topic chat 11 months ago, last February. And he says this is something he never suggests because invariably the organization needs to split up. And when both partners aren't working together, if one partner wants to leave, the whole organization has to fold. And usually it's like going through divorce court because it's too complicated. So consider the situation. You and your best friend start a consulting firm, and you're doing this on the side. You're both working full-time jobs. You both have families. You're busy doing all your extracurricular activities. And then on top of that, you find time to do this consulting business. And you amazingly have this great year. You generate $100,000 in revenue. And that turns out to be $90,000 in profit, right? Well, when it really boils down to it, you were doing probably 70 or 80% of the work because this is just group process. This is classic. Something needs to get done. You get it done, you can depend on it. And your best friend is definitely supportive and definitely did some work, and they have some skills and some input into it, but they might have done about, let's just say 25 to 30% of the work, and you did 70% of the work. Well, when you go to look at those profits are supposed to be split 50-50, and that's the way that's set up. So I would be cautious about how you set up partnerships and whether you're doing this, because at a certain point, things are not always equal, and it's not easy to set up that sharing process. Now I have stock with my wife, and she gets technically some part of everything I bring in, but it's shared and it's with my wife. I'm not sure I would feel as comfortable doing that with a non-life partner, somebody who I don't live with and I haven't committed to like that, because life happens. Think about like every rock band you've ever known. That's just how many of them make it work. Anyhow, all right, let's get into limited liability corporations. These are the ones that a lot of us file. I don't have a limited liability corporation. Actually, technically, I think I do, but I don't identify in the way that I'm going to share with you here. You'll see it as an LLC. It's more formal business than the sole proprietor. The key here is your profits and losses of your company pass through, quote unquote, pass through directly to you or to each member, and you're only taxed at the individual level. So that way you avoid any kind of corporate taxes or this double taxation idea. You are not required to have, and I didn't finish my sentence there when I was typing this out. You're not required to have corporate meetings or bylaws. You do need to have some organizational papers, right? But it's effectively limiting your liability, just as we were talking about it, and that's the key idea here. You do set up a separate entity. When you set this up, you're going to have your own checking account. You can be identified by a bank separately from your individual, though they're going to see you connected. You do have an independent federal employer identification number for taxation purposes. Now, an S subchapter corporation, or usually just called an SCorp, is a business that chooses to pass corporate income losses deductions through, and you don't have double taxation. Effectively, you're setting up a small business. You're limited to 100 shareholders, which is a lot. I don't know anybody who has 100 shareholders, but the point is there's benefits of being an S-corp that C-corps might like, but C-corps can't do it because they're too big, right? They really don't want to allow the big players into the benefits that come here. This is meant for small businesses. Differences here, you definitely have shareholders. So I have two shareholders, my wife and I. She owns 40%, I own 60%. We issued stock. The stock, technically, this is just advice on my lawyer, $1,000. So I don't know that there was actually ever $1,000 passed. I think I invested $1,000 in my first checking account, and that's maybe where that came from. You do have requirements to have at least one annual meeting. You do have a board that you elect. And frequently, there are LLCs that operate as S-corps. And I think that's the way Kurt operates, and I'm going to ask him about that when we get to the question and answer period. I operate this way. I like this. This is set up so that I have employees. I'm not sure LLCs have employees and pay people as employees, though I'm not entirely sure about that. But I have employees, and it's an interesting thing because I have to literally kind of like split my head in half. I've got over here, I'm employee for Goshen Education, and over here I'm business owner. And these are two different people, right? Although I'm all composed in one head, you can hear, I have lots of voices in my head. But the key there is I separate kind of those things. So I do earn a salary, and I set good advice here is you set your salary low so that you can take more in the way of profits, and then you're taxed at a lower rate for your profits that you take out as an owner. I'm not in that situation anymore. I had to take on a larger salary because I have a government contract, but that's neither here nor there. Let's see here. I have lots of ideas about the subchapter S corporation or S-corps. But I think the key here is you're really setting up just that small business that operates on itself. I like my board meetings. It's a meeting that I have at least once a month with my wife, and I just walk through what's going on. I show my revenue, my projected revenue, my projected expenses for the rest of the year. We plan things out. We talk things through. They used to always involve sushi, but now they're in the morning, so they always involve coffee. But anyhow, C-corps is the next one. I'm just going to cover this so that you know that they exist, but none of you should ever think about becoming a C-corp. They're really complicated organizations. They're kind of the old school organizations. Think of McDonald's, right? They are a classic C-corp. The real benefits come through because you never really want to take too much out of the C-corp as profit, because you get taxed on it, and the corporation gets taxed independently as well. So that's why you'll hear this term double taxation. The corporation makes $100,000 and they get taxed, and then you want to take your share of that $100,000 as an individual and you get taxed again. So that's why you'll hear a lot of people who own corporations that they never realize any of the income, or they don't realize any of the profits, because it's not in their best interest to. This makes a lot of sense for people who own a lot of property, because they'll buy a piece of property, they'll do something fantastic to it, and they'll sell it, they'll flip it or something, and then they have like 6 months to reinvest those funds. I think it's 6 months to reinvest those funds into another property, and so they can continue to grow their wealth within this company. Now, again, I don't know enough about C-corps to say how they ever get to realize that, but maybe they never do. But anyhow, that's what a C-corp is. But they are large organizations, typically more than 100 shareholders. And again, I told you I have 2. So I can't conceivably see myself getting much anywhere near 100, let alone larger than 100. So, but it's out there. Other ideas. Now, you'll hear, I didn't even know about B Corps until I started presenting on this at a roundtable at the Meet the Pros session several years ago. But a B Corp, as I've learned, is not set up and identified by the federal government. It is, in fact, a kind of like something you elect to do, and you kind of identify through. It's kind of like getting accreditation as a university, right? You agree and abide to do certain things with your company, but you are, in fact, set up as far as the federal government's concerned, you're set up as an LLC or an S-corp, or even a sole proprietorship, I think. I don't know, but it's really, you're identifying this with a private organization, with like a not-for-profit. You'll see these. I don't have any references off the top of my head, but I know several of our consulting friends have set up as B Corps. Oh, it'll come to me in a little bit. The group out of Minnesota, they're a B Corp. But it's basically saying you're going to provide so much in the way of your profit back to nonprofits, your you're going to give time in the way of pro bono activities for good causes, these sorts of things. I'm not one. I've considered it a not-for-profit. There are folks who set up not-for-profits as their consulting firms. I don't recommend it because it kind of limits your flexibility. You do need to create a board, and it can't be just like you and your wife as my board is. We have flexibility. So if I go to my wife and I say, we really need to do this thing, we should do this. If she's on board, we do it, right? Or frequently, there's not as much requirement for board governance. So a not-for-profit's going to have a lot of board governance. The advantage here is if you are working within a certain sector, you can apply for certain types of grants and contracts that others may not be able to. I think some people see it as kind of just like their belief in who they ought to be. They also have a lower tax burden, right? I would be careful here because you can't you don't take profits out of a not-for-profit, because clearly you can't. That's in the name. If you bring in, if you're set up to have the revenue budget of $100,000 and you have a fantastic year of $250,000 comes in, that $150,000 has to be invested back into the not-for-profit. Now you could go to your board and say, I deserve a salary raise, but they don't have to agree with that. The other structure we often see, particularly with these independent consulting workshops, are research institutes. And they frequently aren't thinking about this in the way of limited liability or those, because they're typically associated with a larger organization like a university. That being said, there's benefits and there's, I'd say, a lot of costs associated with being affiliated with a research institute. I thought a lot about this quite a bit when I first set up, because I was actually thinking about creating a research institute affiliated with the university where I worked as the director of institutional research. And in many ways, I'm very happy I didn't do that. There are times when I thought, well, wouldn't it be nice to go work for a university? The biggest benefit is name recognition. You could say, I am the director of the Evaluation Research Institute at this very famous institution that everybody knows because that logo is up on all the billboards and all the kids want to go there. And so it's affiliated with your community, and so you get instant credibility. Oh, well, you're with such and such an institution. What you're going to find with the biggest downfall with a research institute is, I mean, the liability is being assumed by your organization, but you need to pay overhead. And so I have overhead right here all around me. This office, it costs me, all three of my offices, we have probably 1,500 square feet. It cost me about $1,800 a month. So that's nothing. It's very, very cheap. I have no overhead compared to what you need to pay to be at a university. So your overhead is going to be your boss, your space, which is probably pretty expensive. Frankly, every time you bring in a contract, they're going to say, for every dollar your organization gets for your expenses, we want another 50 cents. So that's the indirect cost rate. So anyway, that's the expense there. It's very expensive to operate a research institute because a lot of money has to go to the institution to support your organization. Now, the overhead that they're covering, you don't have to worry about, managing a human resources department. You don't have to worry about accounts payable and accounts receivable. You can outsource that, although I think you probably will still worry about those things. But you do have an operation to manage those things. Maintenance and facilities. There'll be a guy or a gal who comes and picks up your trash, but I'd sooner just take out my own trash and save on all that money. Anyway, some general steps to starting a corporation. I don't know this is always in the right, if this is in the right order, but this is the order that I got from Investopedia. You need to choose a name. Make sure you're doing a name search within your state. And if this is a great name, you may want to check outside your state too. I think there's 2 eval solutions identified with AEA, and they're 2 different people from 2 different states. So make sure you're thinking about your name. Now, I have never assigned a registered agent. I think I'm technically my own registered agent, but that is the person who receives any kind of formal paperwork regarding your organization. If you need to register in another state, you will need to get a registered agent. So I've never done that for Missouri for my company, but we do have a registered agent for our not-for-profit, the EASL, the Evaluation Association of St. Louis. You may need to file articles of organization. If you're starting a business, even if it's a sole proprietorship, you do need to file something, even if it's just a business license. Usually you're filing that with your county. Again, everybody's different. Go to your county and ask about it. It's interesting because you're filing some people have to file locally, some have to file with their state, but typically it's with your county. You can apply for a federal ID number. All of these things you're doing because at some point you do want to have a checking account. I'm not going to go into why you want to have a checking account, but it really comes down to just separate personal from business. But at a certain point, you want to have your own checking account in your company's name. All right. I feel like I've just been talking and talking here. I want to hear from you guys, and I definitely want to ask Kurt to tell us about his experience of transferring from an LLC to an SCorp or an LLC taxed as an SCorp. I don't remember. But before we do that, I want you to see we do have some upcoming sessions. Next week, I'm going to do the annual session. I do the core topic on niche identification. This is my greatest hits. I talk about this all the time. In fact, I just did this with the workshop group that I've got. Obviously, talking about good to great and a couple other ideas. 2 weeks is a really great special thing. It's the subcontractor fair. We have 7 prime contractors, people who will have their own rooms, who will have a chance to talk with, who may be looking for, who have experience with hiring subcontractors to work on their work. We'll also have a couple rooms for just everybody to meet and talk about what they're doing that are kind of more TIG related, topical interest group. So we'll probably most certainly have one around STEM, one around non-for-profits, perhaps some that are like around qualitative methods or quantitative methods or the data visualization, those sorts of things, so that you can get around those folks and you can talk to people. You may be going there because you have those skills, or you may be going there because you want to meet people who have those skills to help partner on projects going forward. But plan on that. It is on February 3rd. That's the same time, 2 weeks from today. I already said Susan and Ann, and I think Cheryl is joining them for the partnership session. And then we go on and on. I'm excited. There's lots to talk about here, but I am excited about this session on March 31st with Amy Schlotthauer. She is a regular participant in these, and she pointed out how she's reading the book Company of One. And I said, well, you're going to come on and talk about it. So I'm halfway through it. It's a great book. All right, with that, I'm going to stop this recording and let's talk a little bit.